Hello, Namaskar, Kem Cho और क्या हाल है? I'm your news host Parvati Nirvan and welcome to Crypto TV. Let's begin today's evening news bulletin. RBI tells its central board that it favors total ban. Microstrategy discusses lending out its Bitcoin. US Financial Stability Oversight panel views stablecoins, cryptos as threat to financial system. Kraken Ventures raises $65 million to invest in Web3 DeFi blockchain startups. Crypto giant Binance may select UAE as global headquarter. Japan's SBI announces launch of crypto fund with Bitcoin and Ethereum. A fifth of large firms will use digital currencies by 2024. Instagram actively exploring NFTs, says Chief Adam Mosseri. Football club Bradford City receives takeover offer from US crypto investors WAGMI United. A woman claims she was groped by a stranger in Metaverse. The Reserve Bank of India told its central board that it was in favor of a total ban on cryptocurrencies as partial restrictions will not work. The RBI made a detailed presentation to the board highlighting its serious concern relating to microeconomic and financial stability as well as exchange management. The central bank also highlighted the challenge of regulating intangible assets that originate overseas. Among the issues raised by the RBI was trackability of transactions, valuation of cryptos, the extreme price volatility, legal issues, and identifying the various actors in the crypto transaction chain as the area of concern. However, a few members cautioned the central bank and advised to proceed with caution, while another member cautioned against policymakers taking extreme steps and risk being cut off globally. The RBI has been firm in its opposition to give recognition to alternate currencies. While the central bank has been forced to retract its 2018 ban on cryptocurrencies following a Supreme Court order, it has not changed its mind. Microstrategy Bitcoin's largest corporate holder may be exploring lending out the asset to counterparties. After accumulating 122,478 Bitcoin, Microstrategy is looking at putting its holding to work in the future. In a call with shareholders, the business intelligence company's CEO Michael J. Saylor discussed generating debt from its Bitcoin. During the call, Saylor discussed how lending out Bitcoin could be lucrative for Microstrategy. Among the options under consideration, including putting a mortgage against the Bitcoin holding and generating a long-term debt under favorable circumstances, or lend it to a trustworthy counterparty, helping to generate a steady source of income for the company. The United States Financial Stability Oversight Council, or FSOC, has voiced its concern over the adoption of stablecoins and other digital assets. In its annual report, the FSOC felt that consumer confidence in stablecoins could be undermined by factors such as illiquidity, lack of appropriate safeguards, opacity regarding redemption rights, and cyber attacks. The FSOC in its report also warned about developments in decentralized finance or DeFi, where the use of high leverage could trigger a fire sale when the price of underlying asset declines, which would trigger a cycle of margin calls and further price declines. The report outlined that users of these services face the risk of loss due to market value fluctuations, operational issues, and cybersecurity threats, among the other risks. In the report's recommendations, the FSOC calls for a unified effort between federal and state authorities to enact legislation on stablecoins and digital currencies. Kraken Ventures, an independent investment fund led by Kraken alumni targeting early-stage companies, announced the launch of the $65 million Kraken Ventures Fund. The fund will seek initial investment in early-stage companies and protocols starting at $500,000 and up to $2 million. Kraken now aims to help innovative projects and their founders accelerate the development of their companies and protocols. Kraken Ventures also revealed that it appointed Laurence DePorter as the fund's head of Europe. The New Europe led is part of Kraken Ventures' global expansion. The European crypto scene has been booming with the influx of institutional money and impending regulation wave. One of the most promising areas will be the intersection of crypto and fintech. Of late, there has been an enormous amount of money directed toward funds that provide liquidity to early-stage crypto companies and blockchain protocols. Binance Holdings Limited, which operates the world's largest cryptocurrency exchanges, has held discussions with regulators in the UAE about a potential headquarters in the Gulf Arab nation, reports said. Executives of Binance have held talks with officials from Special Economic Zones, Abu Dhabi Global Market, Dubai International Financial Center, and Dubai Multi-Commodities Center about a potential move. Setting up global headquarters is a key step for Binance as it wants to establish itself as a mature, regulated financial institution. Founded in China in 2017, Binance has grown into a global crypto powerhouse, yet has avoided picking a head office and instead has incorporated firms in locations worldwide, making it difficult for regulators to establish jurisdictions over the company. Under the pressure from regulators, co-founder and CEO Changpeng Zhao said in July that Binance is stepping up on licensing and compliance procedures and plan to establish multi-headquarters. The company has faced probes and consumers warning in several countries, including the US, UK, Japan, and Germany. Japan's SBI Group, often referred to as Strategic Business Innovator Group, has announced the launch of a crypto fund for investors amid the country's stringent regulatory crypto scene. The fund offerings include 7 cryptos including Bitcoin, XRP, Ether, Bitcoin Cash, Litecoin, Chainlink, and Polkadot. The fund began accepting applications from December 17 and will close on Jan 31, 2022. However, the maximum number of holders in the fund will be limited to 499 with minimum investment of 5 million yen or more in units of 1 million yen or $8,795. The fund will rebalance its portfolio in case of one asset becomes extremely dominant. The fund also aims to lend the cryptocurrency assets to be sold to the cryptocurrency exchange company for a short period of time. As much as 20% of large organizations globally will use digital currencies for payments, stored value, or collateral by 2024, according to a Gartner report. The forecast by Gartner is important for chief financial officers (CFOs) to assess use case and potential risks for digital currencies because increasingly cryptos will be used for business transactions and the medium will also grow in overall economic significance in the years ahead, the report said. Increasing mainstream acceptance of cryptocurrencies on the traditional payment platform and the rise of central bank digital currencies (CBDCs) will push many large enterprises to incorporate digital currencies into their applications in the coming years, the report said. Macroeconomic pressures related to ongoing high inflation and its impact on fiat currencies could push more CFOs to explore some digital currencies as a potential store of value for a portion of their reserves. Gartner thinks that with increasing innovations and end-use applications, organizations will no longer need to develop a customized blockchain application stack. That's all for today's news. For the daily news and updates of crypto world, don't forget to watch English News Bulletin twice a day, only on Crypto TV. This is me, Parvati Nirban, signing off for now. Tata, bye bye, namaskar, avjo, और फिर मिलते हैं. So keep watching Crypto TV.